We're taking a look at what might be in store for the housing market for the second half of the year and how millennials are playing their part. Real estate expert Rick Sadle with Keller Williams Realty and SadleRealestate.com is with us. Good morning again, Rick.
Hey, good morning.
All right, let's paint some broad strokes about what home sellers and buyers should expect for the second half calendar year 2024. What do you think?
Well, I think the market continues to be a strong one, albeit slower than it's been in the recent past. And I think it's going to continue to be that way, right? A little bit more active, but not quite as active as in years past, right? The thing is, we're getting more inventory, right? A lot of sellers who are holding off because they didn't want to give up their 2% mortgage, right? But they just can't hold off any longer. In fact, the latest numbers tell us that we have almost 10% more new listings year to date than we did for the same time last year. So that's definitely going to help buyers find homes for the rest of the year. At the same time, it's not enough inventory to drive down prices. In fact, I suspect prices will be up by a little bit by the end of the year and for sure by the end of next year. I think it's definitely going to be the case, especially if the Fed ends up cutting interest rates like we suspect they will by the last quarter of this year. And if that happens, it's definitely going to drive up demand and therefore prices.
Okay. So these millennials, we're talking about the age demo, by the way, 28 to 43-year-olds this year. That's how old you are if you're a millennial. What kind of impact are they making specifically?
Thanks for making me feel old. Yeah,
Right.
that's definitely the toughest segment of our market, right? It encompasses a lot of first-time home buyers, some move-up sellers, but mostly first-time home buyers. And those price points are the ones that are most restricted, right? And therefore the most competitive. In fact, while we're not getting multiple offers broadly across the market very much anymore, that is the one segment where we're still getting multiple offers on listings in that price point. So it's a super tough one and hard for millennials right now.
Yeah, the dynamic relationship between sales price and mortgage rates. Let's go over that again real quick.
Yeah, it's a sad but interesting dynamic, right? Buyers right now, they're super rate sensitive because they're used to those 3% mortgage rates, and now all of a sudden it's 7 or 6.5 or 6 3/4, and people are super rate sensitive because of the affordability. So we can see demand go up when there's just a 1/4% interest rate drop. So when demand goes up with the super restricted supply we have right now, prices go up. So right now, if buyers decide that they're going to wait, let's say a year for interest rates to go down and by 1% or something, well, the odds are they're going to end up paying more on a monthly basis than if they buy right now. And that's because as interest rates drop, buyer demand goes up, therefore prices go up.
Exactly. The median prices go up and equity in your home, if you're already in, goes up. That's the idea, right?
That's exactly correct. Yeah.
Okay. All right, Rick, thanks for talking to us about millennials. And yes, we're old, but that beats the alternative. Rick, good stuff. Thanks again.
Thanks.
That is Rick Sadle, real estate expert with Keller Williams Realty and Sadle Real Estate.